The global economy is shifting fast. Rising tariffs, volatile markets, and soaring gold prices are making headlines. In this video, we'll break down the key global developments you need to know in April 2025. From US-China trade tensions to market reactions across Europe, Asia, and the crypto space. Let's dive in. US-China trade tensions and tariff updates. US-China trade tensions have escalated sharply. Washington has imposed sweeping new tariffs on imports, a blanket 10% duty on almost all goods, plus steep country-specific tariffs. Notably, President Trump announced a 34% import tax on Chinese products, on top of existing duties. These moves have rattled businesses and investors, and Beijing has responded with its own retaliatory tariffs, further straining relations. In an effort to calm markets, the US made a surprise U-turn by pausing many of the tariffs for 90 days. This temporary reprieve applies to dozens of countries. However, tariffs on China were not lifted. In fact, the effective US trade barrier on Chinese goods has surged to about 125%. In other words, the US-China trade war is still very much alive, fueling uncertainty in global trade. Gold prices hit record highs and US stock market reactions. Amid these trade tensions, investors have flocked to safe haven assets. Gold prices have smashed through all-time highs, reaching around $3,167 per ounce this week. That's an unprecedented level, and it reflects how anxious many investors are. When uncertainty rises, gold often shines. At the same time, US stock markets have experienced intense volatility. In early April, the market saw one of its worst single-day drops since 2020. The Dow Jones plunged nearly 1,700 points, and the S&P 500 fell about 4.8% in one session. Fears over tariffs, higher costs, and a possible economic slowdown triggered a broad sell-off. Tech and retail companies with global supply chains were hit especially hard, illustrating how trade policy is impacting equities. The good news is that once the tariff pause was announced, stocks rebounded sharply. But the overall picture remains mixed. Gold is up over 18% year-to-date, while major stock indices are still trying to regain lost ground. This divergence shows the push and pull between fear and optimism in today's markets. European, Asian, and energy markets update. The ripple effects of the trade dispute are being felt worldwide. In Europe, economic growth has slowed to a crawl. Germany, the continent's largest economy, is now forecast to grow only about 0.1% this year. Business confidence has been shaken by the tariff turmoil, especially since Europe was initially a target of US reciprocal tariffs. With inflation also subdued, the European Central Bank is preparing to cut interest rates on April 17th to support the economy. Extra stimulus is on the way as policymakers try to counteract the headwinds from trade uncertainty and a strong euro. Even with the recent tariff truce, downside risks for Europe remain, a point underscored by rising unemployment expectations in countries like Germany. Asian markets have seen wild swings as well. When the tariff pause was revealed, stock markets across Asia rallied in relief. For example, Japan's Nikkei index jumped over 7%. South Korea's Kospi climbed more than 5%. And Australia's ASX 200 surged about 6%. Even markets in Taiwan and Hong Kong saw big gains. However, China's Shanghai Composite only rose around 1% on that news. This muted response in mainland China makes sense. The US tariff pause excluded China, so Chinese exporters still face those hefty US duties. China's economy is coping with the fallout. Export growth has slowed and supply chains are adjusting. Across Asia, there's relief that a broader global trade war might be averted, but caution lingers as the US-China standoff continues. Turning to energy markets, we're also seeing the impact of these global trends. Oil prices have been under pressure recently. In fact, crude oil benchmark prices fell about 1% on the tariff headlines, extending a decline driven by worries that trade tensions could trigger a recession. A weaker economic outlook can mean less demand for fuel, which weighs on oil. On the supply side, OPEC Plus, the OPEC cartel and its partners, have maintained a steady course. The group is fairly optimistic that oil demand will keep rising. They project global oil demand to grow by about 1.4 million barrels per day this year, and they have begun increasing production again as planned. As of April 1st, OPEC Plus is adding roughly 2.2 million barrels per day of output, aiming to ensure adequate supply. This should help stabilize prices, but volatility is likely to persist. Energy traders are balancing OPEC's confidence against the downside risk of a cooler global economy. We'll be watching how oil markets evolve as the year progresses. Bitcoin and crypto market performance. Finally, let's take a quick look at the Bitcoin and cryptocurrency market. Crypto hasn't been immune to the broader market swings. Earlier this year, Bitcoin surged to a new all-time high. It briefly traded above $109,000 in late January amid a wave of optimism. However, the crypto market then pulled back significantly. By late March, Bitcoin had retreated to around $75,000, a roughly 25% drop from its peak, as investors took risk off the table during the global market sell-off. In recent days, Bitcoin has rebounded and is hovering in the low 80,000s. Even with that recovery, Bitcoin is still down about 16% for the year to date. In general, cryptocurrencies have been trading in tandem with other risk assets. When stocks plunged on trade fears, crypto also dipped, and when relief came, crypto bounced back. There haven't been major crypto-specific shocks or bullish catalysts this month. Instead, digital assets are largely responding to the same macroeconomic news driving stocks and commodities. It's a reminder that Bitcoin, often dubbed digital gold, can behave more like a high volatility tech stock in the short run, rising and falling with shifting investor sentiment. Conclusion. To sum up, the global economy is at a pivotal moment. Trade tensions between the US and China remain unresolved, keeping businesses and policymakers on edge. Safe haven assets like gold are soaring, while stock markets ride a roller coaster of sell-offs and relief rallies. Europe is bracing for slower growth and adding stimulus. Asian markets are feeling every twist in the trade saga, and oil producers are trying to navigate a murky outlook. Even Bitcoin and cryptos have been swept up in the volatility, reminding us how interconnected markets have become. Thank you for watching this economic update. If you found this analysis helpful, please give the video a thumbs up and subscribe to the channel for more insights. We'll continue to track these developments closely. In our next video, we'll dive deeper into how these global events may impact long-term investing strategies, so stay tuned for that. Until then, stay informed.